Welcome to today's video. In today's video, I'm going to be giving you a full trade recap of how I made just over $6,000 copy trading across my 5 funded accounts. Today, we took a sell on the S&P 500, and as you can see, it was a very clean move straight towards the draw on liquidity. Let's get right into it. The first thing we're going to do is we're going to start off on the 4-hour time frame. Now, looking at the 4-hour time frame, we can see that we had this unfilled bearish fair value gap going into market open. My prediction was that at market open, we were going to come up, tap into this bearish fair value gap, reject from it, and then start to make a push downwards. And that's exactly what we did. As you can see, we tapped into it and then we got that strong rejection out of it. If we then look at the hourly time frame, it's the exact same thing. We had this high, price came up. Additionally, we tapped into this. Oh, we didn't even tap into this hourly, but it doesn't matter because we tapped into the 4-hour and then we got that solid rejection. Now, if we have a look at the 15-minute time frame, you'll notice something very interesting. In this whole movement down before market open, you can see that we had unswept London highs, unswept Asia highs, and unswept equal New York PM highs. These are very strong draws on liquidity. So my expectation going into today was that we were going to sweep those out. We were then going to get a reversal and we were then going to start targeting the lows. And that is exactly what we did. Market opened here at 2:30 and you can see straight away price starts pushing up higher, targeting London, Asia, New York. Once we swept out New York PM session highs, I knew, okay, now it's time to look for that reversal. In order to catch the reversal, the first thing I did was I dropped down to the 3-minute time frame. My first thing that I wanted to look for was an inverse fair value gap because that confirms to me that we are flipping structure from bullish to bearish. And that is what we got right here. We can see that we have this 3-minute bullish fair value gap and we get a nice, lovely, clean inversion with this candlestick closure. Once we got that inversion, I thought, perfect. Now the trend is starting to flip. And here is where I have to wait for the next step. Dropping down to the 1-minute time frame. The final thing that I wanted to wait for was a retest and a rejection of a bearish fair value gap. And that's exactly what we got. Price came down. We retested this fair value gap. We then got this lovely rejection. And here is exactly where I entered in this trade. Now, a few other reasons for why I entered in this trade is because we had a bearish SMT. As you can see, we have this high and we have this lower high right here, high, lower high. And if we head over to the NASDAQ, it's actually the other way around. Let me show you. On the NASDAQ, we had a high and a higher high. So that's a bearish SMT and that's a perfect indication or a perfect confluence that symbols that we're going to get a reversal from that area. Now let's go back over to the S&P 500. Another thing that I did notice that gave me additional confidence going into this trade was that we had also come up and retested this 1-minute bearish fair value gap. We can see price comes down, we come up, we retest it, and we reject. That bearish fair value gap also aligns with equilibrium of the range, which is one of my favorite confluences in trading. You can see price comes into this discounted zone. We tap into that bearish fair value gap. We then reject out of it. We then get the retest, rejection, and bang. That's exactly where I took this trade. Now, I decided to set my stop loss just above these highs, just above this bearish fair value gap, because it just is a protected level. And when it came to my stop loss placement, my take profit placement, I was ultimately targeting this low all the way down here. Once I entered in this trade, I took partials once price had come down and swept out this low. This was a strong draw on liquidity. And as you can see, that's why this arrow here, it symbols that I actually took out 80% of my position. I then left the final 20% all the way down to this final draw on liquidity. And as you can see, price came all the way down tapped it, and then reversed from there. So that meant it was a perfect take profit placement. That right there is a quick summarized trade recap of the trade that I took today. As you can see, it was a beautiful sell position. We had a bearish SMT, we swept out equal highs, we took out session highs, and we had lovely draws on liquidity to the downside. That's exactly why this trade played off. Additionally, we were rejecting off a 4-hour bearish fair value gap, so the higher time frames were also aligning with the lower time frames. And that right there is time frame correlation, which is really, really important in trading. This made me just over $6,000 across all my fundeds, which is a great way to continue the win streak, considering that yesterday we took another massive win, which made us just over 7,000. So it's safe to say that it is looking good. Let's see if we can keep this up going into tomorrow. But that right there is a full trade recap, and I hope you enjoyed. Let me know if you have any questions.